Geoffrey Rogow is here to tell us the Aussie dollar. You might not know this. The Aussie dollar is now the third most traded currency in the world.
That's right.
Right. And it has been rising, and it could rise further. That's your story, right, Geoffrey Rogow, in the weekend paper?
Yeah, I mean, absolutely. It's one of those things where, whenever you write a market story and you're talking about something going up or down, you basically want everyone in the market to disagree with your story. Because when everyone says something's going to reach a new high, that's probably when it crashes. And so, basically, the last time the Aussie was moving toward these 30-year highs, these the highest levels since it was floated in 1983, there were all these people who said, oh, it can keep going and going and going, and that's right when it started falling. This time, there's a lot more naysayers. People saying China's slowing down. We had the PBOC over the weekend saying growth is 7.5%, maybe not 8 or 9. And here we have the Aussie staying in, handing in well, and there's a couple people in the market.
It did take a hit last week on that, right?
It took a hit on that and
on the China story.
On the China story and some weak local data. But the fact is, if you look at these currency awards, which is central banks moving to sort of tip high currencies, Australia's central bank is the last one that will ever do it. They did a 20-year report on intervention and then realized it's a complete waste of time. This came out in December, so we're never going to intervene. It was a waste of our time to ever do it. On top of it, they've raised rates 7 out of 13 months. They cut the last 2 months this year and have said, well, that's probably going to be it.
Now, we should point out that you were just down in Australia, right? You were working down there for us. Now you've moved back. Missed the Super Bowl, but that's okay. But I want to get your sense on the economy down there, because the economy in Australia is strong, correct?
And look, there's one sector of the economy that is doing amazing, and it's really in two parts of the country. So you have Western Australia, which is the Pilbara, it's iron ore, and it's going right to China. And then you have Queensland in the eastern part of the country, and that's coal. I mean, they have two of the largest coal ports in the world are on the east coast of Australia. So you've got these two states.
That stuff going to China too?
That stuff's mostly going to China, though India and parts of Southeast Asia are picking up as well. So you've got these two states which are doing fantastic. They've got employment levels below 5%.
Unemployment, yeah.
Right. Unemployment at below 5%, and everything, and jobs are adding, they're adding foreign workers. 150,000 foreign workers are supposed to come into these two states alone next year. But if you look at New South Wales, and you look at Victoria, two more southern states that were supposed to be the banking and finance states, they're doing terrible.
Going back to those resource-heavy states that are doing so well, I mean, with the Aussie dollar strengthening as much as it has, and in your article you say that some people think it could go to 120. Yeah. Which would be still remarkable strengthening from where it is right now. I mean, if it strengthens at all, doesn't that bode pretty poorly for the export story that Australia is? I mean, if they have to export all these products to China, eventually it's going to become too expensive.
Yeah, I mean, they say that the bigger worry for them is competition. It's Chile, it's South America, it's potentially other parts of Asia coming in and filling that gap. But given the investment that's already in the pipeline, there's about $470 billion of investment to grow these parts of the country. There isn't that much of a worry that all of a sudden China's going to say, all right, the currency is too hot, we're getting out. They've put too much money into the ground not to see the fruits of that labor. So there's less of a worry at 120, more of a worry about competition.
Now, how much of this is tied to the carry trade?
Look, if you look at the actual amount of trading in the currency that's related to goods and services, it's about 1%. I mean, if you look at most of this is people using the currency to do other parts of their business, and the carry trade is probably the most popular about. And to sort of talk about what we're doing is you use a currency or use a country that's got a yield of 4.25%.
Right. You borrow to where it's cheap and you lend where it's a little pricier, and you pick up the difference.
That's exactly right.
Yeah.
And then look, the RBA, the Reserve Bank of Australia, has rates at 4.25%. When we're at 0 to 0.25 in the U.S., Canada is the one that's supposed to have the best, and that's still 3.25.
Brazil has near 10%.
Right, but it's not. But the currency isn't.
We can talk about currency rates all day, but we have to leave it there. Geoffrey Rogow, thank you very much.